I'm Charlotte Radford, editor in Europe for Fastmarkets, metals, ores and alloys coverage, and also part of the global team pricing the cobalt market. At the height of summer in Europe, it's usually a pretty quiet time for the physical metals trade, but that was far from the case in the cobalt market this year. Prices gained as much as 12% during the first week of August. They rebounded from near year-long lows and successfully recouped losses sustained over May, June and July in just a few days. Our prices for the cobalt metal market in Rotterdam form the industry benchmark, and back in February we started assessing and publishing our standard and alloy grade quotes daily. If you look here on the dashboard, it means we succinctly captured each day's move during those first few days of August, from buyers putting out the feelers for offers and gradually hiking their own bids in the beginning of the week, to some incredibly active trading days a few days later. By Friday, prices were consolidating at their higher levels, up at $15 a pound and above, compared with the high 13s on Monday. We saw more than 500 tonnes of in-spec metal business reported to our benchmark price assessments for the international market over just that week. That tonnage was made up of a mix of trader and investor restocking and, on a smaller scale, consumer and end-user buying. The unseasonal turnaround in the cobalt market follows a spate of fund and speculative metal activity in China, but it's underpinned by tighter raw materials supply as well. The cobalt hydroxide market has tightened considerably since last year and again since the second quarter of 2020, and hydroxide payables are at their highest since we started tracking them in January 2019. The raw materials and metal markets and their respective prices have reached an inflection point so that the refineries producing cobalt sulfate for batteries are now considering buying and using metal once again. So hydroxide tightness is now having a positive effect on metal prices too. Outside Asia, a lot of end users take August for their summer break. During this rally, a lot of buyers were still waiting for orders from their own customers, but nonetheless were looking at building up their own stocks in case prices took another hike higher. Next, we'll be looking out for how much the metal market has really tightened after this spate of activity, and while the battery space represents a bright spot for cobalt demand, we'll be looking for clearer cues from the alloy and especially the aerospace segment, where COVID-19 has forced a reassessment of demand.
Thank you for watching. To learn more, attend our free webinar, Investment Strategies in New Energy, at 3 p.m. on September 16th.